Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down much more than the stock market is.
Is gold too volatile? Let's get into it. How you doing, everybody? Welcome to Empire Precious Metals. Thank you so much for watching. If you're new to the channel, please make sure you blast that subscribe button and get the bell notification clicked. That way you get updated with any new content. Recently, there was another video that came out on Dave Ramsey's channel talking about the volatility of the stock market as it compares to gold. Now, before we get into the video, this video, and before I show you the clip from the segment of his show, I just want to say, quite frankly, I couldn't give two shits as to what Dave Ramsey says. The only reason why I continue to do these videos is because they do very well on the channel. Let's just call it what it is. You guys look at the most popular videos on the channel, and they all have to deal with Dave Ramsey. So I think in part because a lot of people within the stacking community is, very, very passionate about silver and gold. And on top of that, it seems like it's something that kind of unites everybody to kind of bash another segment of people and investors. So I'll just continue to bring the Dave Ramsey videos for you guys. But in all seriousness, Dave Ramsey's channel, he talks about silver and gold as it relates to investing. And there's no secret there. The guy absolutely just hates precious metals. He talks about how much he dislikes it. The people that put their money into silver and gold are foolish. I can understand where he's coming from talking about it as almost like a religion. I actually do see a kind of a mentality within the stacking community that is so passionate that, God forbid, if anybody says anything wrong or says anything that's negative about silver and gold, they get pissed off. And not to mention, I mean, the few videos where I've talked about selling my silver, selling my gold, people get so angry as if it's theirs. And opposite that, you have a lot of people that talk about silver and gold being a safe haven and also being a savings in case you need it there. And in fact, a lot of the comments that I'll get, people will say how it's a savings for them and that they do a lot better saving their money ever since they kind of got into silver and gold. And essentially, silver and gold, if it is a savings or some type of insurance, then, what is the big deal if you do sell silver and gold in times of need? It just doesn't make any sense, that kind of mentality. And again, the people do get very angry. I've seen it not just on my channel, but other channels too. But now, talking about the volatility of silver and gold, I'm actually going to really only talk about gold in this video because this is essentially what he bashes. Let's just play the clip for you guys real quick.
My gut feeling is to invest it in gold.
No.
We
don't put anything in gold. No. If you don't need it and you want to let it sit somewhere, let it sit in a good mutual fund. That's fine.
That would do better than gold?
Oh, absolutely. I own some gold cufflinks, and that's the only gold I've got.
Okay, yeah. I just don't want to do anything risky at this point. That
risky is gold. Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down much more than the stock market is. A lot riskier. And it does not yield the net return. The average annual rate of return on gold sucks.
Okay, so Dave Ramsey, he essentially tells this individual who was cashing out their 401k, do not put your money in gold. Now, before I show you the charts as to how volatile the stock market is in comparison with the price of gold, what I do want to say is I would actually agree with Dave Ramsey in that this person should not cash out their 401k and just dump it all in metals. Now, a lot of people, within the stacking community, some people would actually say, that's actually not a bad idea. I've seen some people actually say they've taken out home equity lines of credit on their homes to buy some metals. I don't think that that's a good idea. I think that the 401ks are set up to be, number one, run by experts, people that are involved with trading in different funds as it relates to retirement savings. But a 401k has a totally different strategy behind it. You're looking to actually grow your money with a 401k. You're looking to not only invest, but to grow. And then that way it's also tax deferred. And at the time of retirement, you can take that money out and live off of that as your retirement savings. Gold, on the other hand, in my opinion, that's more of a savings account. I do think a lot of people will disagree with me on this. I do think there are some investment aspects to gold in that an investment's purpose, when you look at the definition of an investment's purpose is for you to grow your money, to essentially put your money into a vehicle that is going to realize you a profit. And so I don't think anybody would disagree with me that they're looking to put their money into gold and then 20, 30 years from now, hope that they, just stay even or don't realize a profit. You are looking to put your money in there to see it grow. Now, I also understand that a lot of people will say that the price of gold only goes up because of the dollar, right? When you see the gold prices are higher, that's because the price of the dollar, the strength of the dollar is weaker. I totally understand that. But again, gold is one of those things where it is essentially a savings. It is an insurance, but it's also something that you are looking to hopefully one day capitalize on and make money off of, unless you're somebody that's going to be giving this to your children, or if you're one of those people that say, I'm going to be buried with my gold, and that's a totally different type of individual. But when it comes to the volatility now of gold versus the stock market, I'm going to pull up a couple of charts here, kind of run through everything, and you will see that, at least in my opinion, and I think you will agree with me, that Dave Ramsey is dead wrong. So Dave Ramsey is comparing now the volatility of gold with the stock market. He says that gold is a lot more volatile than the stock market is if you were to look at the chart. So I went on to macro trends and I looked at the charts, both of the New York Stock Exchange, of the Dow, as well as gold. And I looked at them over a series of different time periods. I removed, there's a couple different things that you could do there. You can remove for recessions and interest, inflation, and stuff like that. I just looked at the prices and wanted to see the volatility of both. So what we're looking at first right here is the chart for the last 100 years as it relates to the stock market. Here you could see down here, before the 1950s, it's pretty much flat, and then there you go. You see it kind of takes off, and we are kind of hovering right around here. Okay, so again, we're just looking at the generalities and just looking at the volatility of the two. All right, so there is, guys, keep a mental picture. There is the New York Stock Exchange, the stock market for the last 100 years. Let's take a look at gold. All right, now when you're looking at gold, you see, again, just kind of how the stock market started kind of flat, starts to take off, kind of flat, and then it just shoots up. So if we look at both, okay, it doesn't really, at least in my opinion from looking at the two, the stock market doesn't seem to be any less volatile than gold. Yeah, you have this little spike here in gold and then it drops back down. It's kind of flat. And then here we go, it comes back up again. And up here, you guys got this little bit of a spike. It drops, another little spike, it drops again, and then it takes off. So looking at the two, I'm not really seeing one being more volatile than the other. Now, I looked at the last 10 years. All right, so here's the last 10 years as it relates to the stock market. You see that the general trend is an upward trajectory. You do have your ups and downs, kind of like Dave Ramsey said, drops right down here, right during the pandemic, comes up, and then here we go again, a little bit of a drop, and then it comes back up. Okay, so that's the last 10 years. Now let's take a look at the gold charts. Okay, same thing. It's kind of like up and down, up and down, up and down. And then right around the 2020, right around, the pandemic, we see gold shoots up and then it's just up and down. Guys, I mean, if you're looking at the charts side by side, it doesn't look like gold is any less volatile than the stock market. I don't really know exactly what he is talking about here. Also, you see here that when the stock market drops during the pandemic, right here in 2020, we see that that's when metals take off. And we already know that metals do well in times of uncertainty, especially a pandemic. People were very fearful. So we do see that spike there. Let's take a look at the last 5 years now. Let's kind of like zoom in a little bit more. All right, so here's the last 5 years as it relates to gold, or sorry, the stock market. Okay, here we go. We see that big dip right here during the pandemic. Okay, and then it comes back up, back down again. Okay, so get that mental picture. There's the stock market last 5 years. Now let's take a look at gold. Gold, I mean, ups and downs, kind of ends on a high note. Same with the stock market, right? Ups and downs, and it's still generally ending higher than where we started 5 years ago. All right, actually gold appears to be even better than the stock market when you look here, right? You start all the way down here around 1300 and you're ending right around 1950. And then the stock market's around 24,000, ending right around 33,000. Still both in an upward trajectory, but it looks like gold is nearly almost, not quite double, but you guys get what I'm saying here. So I'm not really seeing any big difference in terms of volatility of the two charts. Now let's get back to the rest of the video. The different charts dating back 100 years, 10 years, 5 years, you're not really seeing gold being any more risky and volatile than you are the stock market. Both have their peaks and valleys, but both are continually on an upward trajectory. Overall, you're looking at this upward trajectory. Now, there's this argument that a lot of people that are advocating for stocks only and not looking at precious metals at all in your portfolio, they will say that if you put the same amount of dollars into the stock market and into gold back in 1950 or whatever, they pick some sort of date back in time, that you would have a lot more money in your account in the stock market than you would gold. I'm not disagreeing with that. I actually haven't looked at it close enough, but I do know that, yes, if you put your money in the stock market back in the day, you would have more money than you would if you were to put it into gold. That's not the purpose of this video. The whole purpose of this video is to show you the price of gold and the price of the stock market on a chart is not more volatile for gold than it is the stock market. I don't know what he's talking about, Dave Ramsey. I don't know what he's talking about. And what point of time he's referring to, if he's talking about it on a daily basis, and if it's based on percentages or pure dollar amounts, I'm not entirely sure as to what he's talking about. Anyway, in the comments below, let me know if you agree with Dave Ramsey in that gold is far more volatile than the stock market, or do you think he's completely off base? Let me know in the comments down below, and hopefully this video recorded because my whole setup is a little bit different now, and I'm looking at myself in like a mirror to see if it's recording on my camera. Anyway, let me know in the comments down below.